Yo, Bougie's here, Bougie. Can you hear me, Bougie? Bit of a mic check before we get started. Zay's here as well. Yeah, so guys, I'm in the Signal voice chat as well. So if you could let me know if the YouTube can hear me, after there's that 20-second delay, and then after that you guys can, yeah, sounds good. You guys can join the voice chat as well, so it's easier to hear you guys potentially. Yeah, we'll just give it about like 2 minutes before we're gonna start. Yeah, this is the last stream of this week, unfortunately. And we'll be back next week. I might start doing these a little bit earlier next week, just so it's easier to get to bed, man. Because after these analysis, it's like 1 a.m. or like 1:30, and it's just man. Can somebody from the actually, let me just try this. Can you guys hear me on the Signal voice chat? Alright, no worries. As long as you can hear me on the YouTube, it's fine for an upload, and then we can kind of jump straight into it in about 15 seconds. Cool. Right. So, welcome back. Alright, no worries with Bougie. So, welcome back. We're on the 22nd of September, and this is the last day of the week, right? So obviously we're going to Friday tomorrow, or rather today in London time is currently Friday, and then we have 5 days left of this, 5 trading days left of this monthly before that closes. So how this monthly closes is going to be very, very interesting, right? Like obviously, the overall monthly structure, let's have a review of that, because we're starting to get towards the end of the month. So previously, we're ranging in these areas. We came down, so I would say you were ranging between potentially like here to about here for quite a while, right? This is from November 2020 all the way to like 2022 February. That's a lot of months there. So that's nearly like a year and a couple months, right? So you were in this massive range, right? You broke out of the range, you grabbed liquidity, came down to grab liquidity, so you may be indicating that you're going up, right? So there's somewhat of a bullish structure in terms of gold, right? You've come down, overall from quite a bullish move here. You've consolidated, you've grabbed that liquidity here, you've pushed up, you're starting to break these highs, right? You had a bit of a fake out here, so you're in this range now from approximately 1914 sorts of areas to about 1997, 2000 areas. So any given point, right, this could have been a liquidity grab to push up, right? We could be looking for a fake out, around these areas to start pushing up, or this could have been a fake out right here. So if we look at this, right, if this so we explained quite a lot of times, I think, that the kind of previous monthly closed bearish respecting 1938, right? At any given point, this could be the monthly salary to go up, and this, if it does start going up, then this right here could have been somewhat of a fake out, right? So if that is the case, if the monthly closes bullish, even if it's like weak bullish, right, but respecting this support, we would be looking for that bottom wick to come down, breaking below these lows potentially, right, to come up and retest these highs. So that's just the overall kind of structure for the monthly. So if we drop down to the weekly, right, weekly has actually flipped bearish now, right? So currently, I think for the last 4 days we've been, or maybe 3 days. So Monday to Wednesday we were very, very bullish for gold on the weekly, with no bottom wick, right? So this current, state of the weekly candle shows that, we've pushed up, we've rejected. We might be respecting these levels, towards 1931 areas, or even these areas here, right? So we could be rejecting off here, because you have these rejections here. That's a very bad rectangle. You have these rejections. You had some support being formed here. You had a fake out here. You have. There's a lot of, like this was also a rejection here. You have support here, and most recently you have this rejection here. So these are all rejections, right? So if this is the level you're respecting, cool. You came up, you broke, 2 weeks ago, you broke that high, and then you're starting to come down. So where can we expect price to go to in terms of the weekly, right? If we're closing, I would say we're currently in this range between 1918 and 1940. So if we end up for this week closing bearish below, cool. We're going to be looking at structure for every single time it's closed below. Like all of these, where to drive from about 1954. These drives maybe a little bit higher, and you can see that on the lower time frame because this is the weekly, right? So the daily will tell you more, the 4 hours will tell you more about where it's going to be driving from. But if this candle starts respecting 1918, or even if it closes bullish, respecting 1918, I would be looking for that bottom wick to tap around 1893, 1903 sorts of areas, and then start driving back up. So again, we're always looking at what it could be mirroring, and we kind of noticed that previously price, when it respected these areas, came down to grab these bottom wicks before driving up. So that's a very high chance that can happen, depending on how the weekly closes, which is in about 24 hours, right? So that's the weekly. Let's go down to the daily. Daily closed very, very bearish, right? So we broke down, I think, yesterday, the fact that the previous daily candle was at some point extremely bullish, right? It was breaking all of these highs, but with no liquidity, right? It wasn't going anywhere. And like Don was saying, and we were discussing this as well, like it looks very naked, right? Like you just had this very, very bullish push, somewhat like this, right? You had this bullish push as well, right? Imagine you didn't have this liquidity grab here and it just started pushing bullish, right? You wouldn't expect it to push much further and like not grab any liquidity, because then you can just expect it to start flipping and start like grabbing that liquidity, but if it wants to continue to drive up. So this is what we're doing, right? We've come down, we've broken below kind of structure at around 1926, 1923 areas. I would say though, we are kind of respecting these sorts of areas around here, and you'll probably see some sort of support being like a smaller time frame support that it's respecting around these areas here, 1919, that it's respecting. So if price wants to start printing bearish again, right? So I would say generally you're probably below, you've broken below here, so the range you're in is quite big. You've broken back into this range, I would say, like between here and there. You could move it slightly down to around here, but I would say this is the range you're in. So cool. What does price do when it enters the range, right? It usually fills the range. So if the daily starts filling the range, we can expect it to tap around 1903 areas, right? And we're expecting that because on the weekly, if we go back to the weekly, we're expecting it to create that bottom wick before it has enough liquidity to drive up. So so that's the daily time frame. So if we're just looking at this, what is kind of the overall structure for the daily? I would say, we haven't broken above these highs. We actually had a massive rejection. So we were very bearish for today as well, right? And we're bearish, expecting a top wick for this daily candle, right, to tap certain areas before driving down. And if you're just looking at last time price closed below these areas, where'd you grab that top wick, right? These are the areas we've been playing all week and all, I think, for 2 weeks now, right? You're looking at these sorts of areas, right? Like you close bearish here, grab liquidity towards these areas, and you started pushing down. You know, you close bearish again around these areas, but you're pushing from around these areas at 1934 to come down. You know, you close bearish. You know, this is very similar to the structure we had previously around here. If we're closing bearish, right, we can look to, you know, like price tapped around 1915 areas, which we broke down yesterday as well. Tapped around 1915 areas, looked for that rejection there to tap around 1930. So if we come up to, like, you know, tap around 1930 areas, cool. The sells from 1930 around here to come down to 1903 will be very clean. And if we can get those wick entries, we could have some pretty strong runners today. So that's the overall breakdown in terms of the daily. So what I like to do is I like to mark up where I find the daily to be, you know, potentially mirroring what's interesting on the charts, what I could be looking for on the lower time frame, just the kind of areas that are interesting. So I'm going to highlight this zone here, right? The push mainly from around these areas. I'm going to highlight this zone as well. I'll highlight this whole thing here, so probably from around here to around here. Cool. So I mean, these are two very strong areas we could be looking at, and a third I would say we're looking at is around these areas here. So, you know, price tapping around these areas, 1947, 1948. Where does it need to go to grab liquidity if it wants to go back up? You know, around 1903 areas, right? It's the same levels. You know, you're always tapping these levels before making decisions, and you fill ranges. So now let's go down to the 4 hour, right? We can now zoom in a little bit more into each individual box and look at what price is currently doing. So price pushed from here, right? 1947. So if we draw a line at around these areas here, you can see that at some point price was also in this range here. You're in this range. Let me move this across. You're in this range here. You had a fake out, right? You're closing below, so you're creating lower lows after grabbing that fake out liquidity. You know, you're creating a lower high, start driving down, right? So we were trying to look for buys yesterday at around these kind of areas at 1915, 08, I think, 1915.8, I think. So if you got in buys here and you held, right, you'd still be good, to be honest. Right now, I would say you're still probably good. You'd definitely be break even now because you're 50 pips in profit. But we're always looking to tap the next logical area where it needs liquidity to drive continuously in the direction that it's currently printing, which is very, very bearish, right? So those levels are, you know, like around, I would say about here, right? On the 4 hour, if you tap these areas, you know, and you don't break above these highs, you're respecting, similar to this, right? So look at this, you know, you come down, you're slowly making your way up. You kind of tap this area initially, but you've been respecting this level the entire time. You tap here, break all the highs, strong push down, right? Came back up, you're still respecting these highs. You know, you broke the highs again, strong push down, right? So I would be looking for sells here 100%. You know, I would very much be interested in this level, because even if price wants to, you know, if it say it's currently here, it does this and does this, starts breaking above, right? You'll come back to about break even before you come back up. If anything, you'll come down to where the previous higher high was as well, right? The lower high usually taps the higher high before going up. So we'll be looking to get out of break even, or, you know, 10 pips in profit, something like that. So a sell here is pretty safe, I would say. And if you really wanted a pineapple, we could look for that slightly later. But just kind of explaining, and I think it makes sense to most people if you kind of look at it from this mirror, like just this push here, and we're mirroring it to up to here to come down to 1903, because we know it's going to fill 1903, right? The daily range and the weekly range is looking to fill 1903. It's very messy, I'm not going to go back. But so how can we get into the trades for the lower time frame? And it's just sells around here and will hold till about 1903. But, you know, realistically, price can start rejecting at multiple areas. So If market structure is looking very bearish and it's looking like it's going to continue pushing down, cool, we'll have chances of runners. But if you're having some no bottom wicks or something, then sure, like we'll probably close out either break even, or we'll close out, we'll move stops to break even, or we'll manage risk in some way. So that's the plan, right? And if you were here for the breakdown yesterday and you caught the buys from around here, right, and you held to about 1922, you'd be, how many pips is that? That's like 70 pips. Yeah, that's like 70 pips of profit, right? So knowing that this is a strong level that price could potentially reject at, dependent and kind of like referring back to previous areas of interest. Let's look at some other areas of interest, right? So what range are we in? We're respecting 1922 as a resistance, and I would say we're down to around these areas here, right? This is the kind of range we're in, 1914 to 1923. Cool. What happened last time price was at 1914? So we highlighted this zone as well, right? So price again pushed from around 1950. These areas around 19, like the 47 areas that we were interested in, it started pushing down from here. As price continued to push, it tapped around 1914, 1913, around here, right? Massive rejection around here, right? So if we get a buy around these areas, that's fantastic. But we got the rejection at about 1915, 1914 areas. So it rejected, it's going up, and we're looking for sells around here, right? Your sells, if you got into a sell at this stage here, your stop loss obviously dependent on whatever situation, even this candle here is less than 100 pips, right? You'd have it around like 120 pips or whatever, and then you'd be just taking profit at approximately 1914, or even you could have held this to 1903. So this is exactly what happened in terms of price action that we're trying to mirror. So if you took the sell and we had previous price data which looked exactly like this would have been a very clean sell for us. So this aligns very well to what we're looking for here as well. So lastly, let's have a look at here. So what does this tell us? Let's have a look. Cool. We tapped around 1947 areas. We've come down, we're pushing down very bearish, right? Strong moves down from here, consolidating around these areas, right? You tapped around 1903 to make some decision before going anywhere. So 1903 is a very much confirmed area that price is likely to bounce at, right? So these are going to be my buys. I'm going to be buying at 1903. Can I get buys earlier? Of course you can, right? But it depends on market structure. So, you see all of this stuff, this is very messy here. But there's one thing that's clear. You have so many wicks, coming into around 19, I would say 18 sorts of areas, loads of wicks around there for rejections to come up, and this range isn't small because we're on the 4 hour, right? This range is still 100 pips, so it's definitely a tradable range, and you'd have to drop down to the 1 hour, 30, 15 to kind of analyze that. But I'm just doing this kind of high level overview of price. So if we're looking at potential buys at around 1917.9, right? What does that look like in terms of current price, right? So in terms of current price, let's look at this area first. This 1917 area is again a very strong level. You see, there's some level of support being formed here, some resistance here. So if price comes up, taps these areas, and then comes back down to 1918, we could get more rejections for those shorter term bullish movements, right? Overall structure, 4 hour, daily and weekly are bearish, but if you're playing the 1 hour, if you're playing the 15, the 5, you could be looking for bullish moves. So in that case, if price looks like it's very, very bullish in the kind of local area, right? Hot MILFs in my local area kind of vibes, then I'll be looking for kind of buys around 1918. But it depends on structure, right? And it depends on whether or not we've already come and tapped 1928. If we've come and tapped 1928 and then we come back down to 1918, cool, I'll take a buy. Because the chance of price driving down from 1928 is high, right? But to drive 100 pips and then not retrace at all and then continue to go down is unlikely. It needs to grab liquidity, right? And at this point, right, price was moving up, grab liquidity to continue going up. And in the case that it's coming down, for example here, right, you pushed, you need to grab liquidity even up to these areas, right? So you grab liquidity quite aggressively to make aggressive moves. So if you're not grabbing that kind of aggressive liquidity, you're not going anywhere. Just chill out. You're gonna be fine. You're in the range. So lastly, let's look at these areas, right? So what does 1918 look here? So 1918 is similar to the kind of 1915 areas that we're currently in. So it's less viable, I would say, in general, for what we're looking for currently. But however, if we get these sells around 1928 and then we start tapping around 1918, we could be mirroring this, right? We've tapped here, strong rejection down. If you miss this trade here, you could be looking to get this if you start respecting these kind of supports that you've been creating as you print bullish. So in that case, I would be looking for this a bearish closure respecting, right, and then a break of the lows in terms of a wick, enter on that wick, and then drive up. Because let's say you got into a buy here, right? Say price, oh shit, grab so much liquidity. Is it just gonna do this? No, right? You've just made, if you look at this here, it probably doesn't tell you the entire picture. But if you look at the overall price action, right? You've come down, made these lower lows, lower highs, right? Then you're starting to, you're potentially coming up again, you've just broken these highs, recently, right? And then you kind of had this massive rejection here to come down, but you haven't done anything, right? So even if you were to come down, I would be expecting this, right? I'd be expecting it to tap these levels before coming back down. And then in that case, this would be a liquidity grab, number one, and this would be a market structure liquidity grab, number two, for us to start driving back down. But in that case, you would be very safe to get your break even there, or even small amounts of profit there anyways. But depending on what you're trading, you also have different levels for your TP. Stop loss in general, we use kind of 4-hour stop loss. By the way, this breakdown is fucking clean. We're loving the structure that's forming currently for Friday. Yeah, just this is looking very good for today. We could have runners, but for example, if you're taking a buy at 1918 after missing this move, the range you're going to be capturing is not that big, right? You could be probably getting breakout. You probably look to get full TP at around 1922, because at 1922 you have a level which you could be rejecting at, especially if price is generally quite bearish, right? But if you're taking a sell with the daily bias, with the weekly bias, and with all the biases, then if you get that wick entry at around 1930, 1928, maybe even 1930 areas, cool. That's when you're looking for the runners to come all the way down. But it's just knowing which ranges you're playing. If I'm looking for this retracement here, right? So look at this, like this lower low. I'm looking for the retracement for this to come up to around 1922. I would have been out in 1922 if I was if anything, right? But then if it starts breaking above, cool, I'll take a sell here because structure is still bearish, right? And then if anything, it'll come back, it'll do this, right? If anything, it'll do that. If it doesn't do that, right, and it starts breaking below, cool, then I'm in profit, right? Then it just starts doing this, liquidity grab to start coming down. And this will be my move. That will be my move, right? If I'm looking for buys at around 1918, the next time it taps, so in the case of this, so say we come down, tapped here, right, we've tapped 1922, we're looking for buys here, you haven't broken these lows, right? You're not breaking these lows, which indicates that, you could have a market structure change, but you also could continue printing bearish. So if you're taking a buy here, right, the range you're probably playing is again, you know, probably just around 1922, these areas, and if it does break below 1915, you'll see a strong push down to 1903. So that's why, for me, I would need to see a tap of around 1928 before getting these buys in 1918. If it doesn't tap 1928 and it taps around 1923 sorts of areas and then taps 1918, I am not getting in anywhere, because this is just very much bearish structure, right? You've just come down, you've made lower lows, lower highs, and you're just tapping these areas. So you're expecting price to come down. Why would you take a buy here? There's no indication here that it's going to start, you know, reversing. So that's the overall structure, I would say. So your two key levels, I would say, for what the fuck is it doing on the 515? This is disgusting. Yeah, this is horrible. But I would say generally for New York, I would be surprised if Don is not looking for a sell around 1928 and buys around 1903. You could get buys closer to around, let's have a look. When it comes back down, we could be getting buys at around 1913 areas. Obviously, it's a very strong area that we usually have some sort of reaction to, right? So say around, yeah, every time. So how I analyze, right? I just see, okay, we've pushed down, you know, we're in this range between 1912 around 1913 to 1923. So we're in this range, right? We're in this range between here and 23, right? So if it's printing bearish and we come down, I'm gonna get, you know, obviously positions at 1903, but we could be getting positions at around these areas here. But if it starts rejecting, we could be looking for a very small push. So we could be looking to capture just this bit of the bullish, you know, some sort of liquidity grab, or kind of just a lower high, and then you create a lower low. So we could be looking for that at around 1913 areas, depending on market structure. But I would say for now 1903 is my main level, and I would say if you do come down to break 1913, I would need some strong structure to be formed during Asian and London. So I would need, for example, this, you know, like it's going up, cool, you know, maybe it's breaking the lows and then starts driving up to around 1928, and I get my sells there. Obviously, because volume starts increasing, right? So if that happens, cool, I'll get my sells. For the buyers at 1913, I'll probably need to see it like start printing like this, and then if it comes down, drops down to around 1913, cool, I'll get my buys in. And then I'll look to target, won't be 28, right? I'll look to target about 18, because at any given point could start reversing, right? Still very bearish. So I'm not going to put buys at 1913 for now, but just notice, just know that it's a key area that we could reject at, right? You're just looking at these sorts of supports. You're looking at very strong level support here, and even here, right? So whether we're currently bearish, but whether you're bearish or bullish, it's a price point that when price gets to, it makes a decision. So let me just get these. Oh, Kieran's here. Sup? So if you look at this on the 1 hour, let's look at this on the 1 hour, right? What does price do? Price wicks into these areas on the 4 hour, right? This is, you know, you have more structure here because you're on the 1 hour, but price comes down to these areas. That's a quick rejection. This quick rejection is usually what we try to take, and that's already 40 pips, right? Comes down, taps this area again, you know, and like does some sort of movement here. At this point, right, you still don't really know what's happening with price. But once you close bullish above this, you know, and this is the 1 hour as well, right? If you're closing bullish back into the range, right, and then you filled the range and you come down, cool, you could be getting a structure change. So at this point, you know, you've retested this area potentially to go back up. So these would be, you know, potential buys around here. So if price does something similar to this, could get buys at these sorts of areas. But again, with current structure, there's not enough for me to make a solid decision on whether or not I would take a buy at 1913, because we're also quite far away, right? We're like 70 pips away. So yeah, just give it some time. You'll be fine. Obviously, I want to keep my level touching as many like bottom wicks or like top wicks as possible, like this, right? Because if like you'll notice a lot of the times price will touch a very specific area and start driving like this. It tapped here, and then you can also see, you know, it taps these sorts of areas very lightly, taps this for that rejection. So, you know, I would say around 1912.7. If we come down to there, we could get like an initial buy here, and then potentially some more buys here depending on structure. But yeah, these are my two levels for today, just based on the 4-hour daily and weekly. I would say more 4-hour and daily, because we're looking at, you know, areas here, and we're looking at what price does at these sorts of areas. Right, it rejects to some degree. You can easily catch your 10 pips or come out at break even at these areas. So they're low risk. Actually, I think I will put a level around here, but depending on market structure, this could be lower, and lower could be, you know, anywhere between 1911 to like 1906 sorts of areas. Yeah. So yeah, that's the analysis for today. Fuck, that's half an hour. Cool. Any questions from anyone? Open to any questions. If you're on the stream, then type it in the chat. If you're on the Signal voice chat, then just unmute yourself, and I don't know if my mic is working, so it'd be a good test. I just needed to grab some liquidity there. Forgive me. Right, let's see if any questions start rolling in. Ascendato, no worries, man. Yeah, I wanted to start recording this just because quite a few people have been asking in terms of like they can't make this time because maybe they're still at work, or I don't know like which time zone they're in, right? So I feel like having recording also, like I can look back in a year and be like, shit, that happened. And like how our kind of trading style changes over time, I think is quite interesting as well. Let's have a look. No questions yet. Don't be shy. We can go back to what we did yesterday and start talking about psychology and shit as well. Yo, Zay.
I really don't have any questions. Can you hear me?
Yeah, Zay.
Yeah, I don't really have many questions. I would probably say today's trading just gave a little more insight on just being flexible with flipping positions. You know, being what did Don say? Versatile, you know?
Yeah.
Because there was points where like people that were in buys were also in sells, and then obviously the buyers came out on top, but there was multiple opportunities to catch sales at multiple points of today. So that's all I would say, just marking up the zones to be a little bit more flexible, because like just because your bias is bearish or bullish, like you could capture on both opportunities based on your perspective.
I think if I kind of show you the trades I was taking, so I have to go to the 5-minute chart, this disgusting thing here. So I can't show you my actual terminal for my MT5, but I'll show you. I took 4 trades yesterday. Obviously I was also in a buy the day prior, which I closed at negative. How many pips did I close negative? I closed some partials, but I think overall I lost about 60-70 pips on a buy that was quite aggressive, to be honest. Where was this buy? Yeah, we were. I was in a buy around these areas, right? Somewhere around here, to look for potential. It wasn't down here. It was like around here, with like quite a steep stop loss. But this, because obviously I'm still learning as well, right? And this is one mistake I've made once before, and now I've identified it as an actual thing that I do, and that's I look for liquidity at times when liquidity has already been grabbed and it doesn't need liquidity. So figuring out when liquidity needs to be grabbed and when it already has enough liquidity to go. And to be honest, like I was talking to Don most of this week, just saying like, yeah, when we do come down, we're going to come down very aggressively. Like, so in the back of my mind, I knew that's exactly what was going to happen. So taking that buy kind of went against my kind of trading style, I would say, and like my plan. But obviously we don't over risk here, right? So we only lost about 0.5%, so we're all good, and we actually made it all back today. But for today's trades, or like the most recent 4 trades, I had a break even around here. So the first time price wicked into these areas is actually very clear on the 30 or the 1 hour actually. So you know how we were previously looking for price to come and tap these areas at 1915, right? So once price tapped here, I was in a buy. I think I was in a buy at like slightly closer to these areas, but price, it started moving up for a bit. It closed, I was in around here and I was looking for that sort of rejection to hold. I was stops to break even at this point, and then came back to stops. Obviously it moved continuously, so maybe one point of learning is it actually there's no need to be so aggressive with the stops to break even if it's tapping a very major zone. But that's for me to journal and to figure out over a longer period of time, right? Over maybe 6 months to a year of taking the same trade continuously. But that's the initial rejection I was looking for, to come up, maybe not up to these areas, but around 1920. That's what happened, right? It tapped 1923, and then when Don had a buy, when he had a sell, I think he had a. Let's have a look. So yeah, he had a sell like here, I think, from like this wick here. And then we closed, I think, like 8 pips or something here, right? I caught 10 pips here, but I was actually also in a buy here. Whereabouts was it? It was like here. I was in a buy here, and I closed 10 pips around the same point around here. So, like, it just goes to show that, like, when you're in a range, it's very likely that it's going to come back. You're either going to, hit 10 pips and then you can close full, or you're going to come back to break even and you can close off at there, or like if your stop loss gets stop loss to break even hits or whatever. But because you're in this range, right, and I was always expecting price to come up and grab this liquidity before doing anything, I got into another buy here as I was looking at this, not really it's struggling to break the lows, right? Even though on the 5 you have like you're still creating that lower lows and everything. But yeah, it just goes to show that buys and sells, it's just what part of the trades, what part of the kind of cycle you're trading. He's trading this very immediate cycle here, right? This cycle where price is very bearish. You're making these lower lows on the 5. You're breaking some sort of structure around here. And I was trading the longer term, needed liquidity to go back down. So both concepts are just right. They're just on different time frames. And they both played out today. So yeah. Let's look. Yeah, no worries, Tyler. Thanks for chipping in. We have all-time high viewers at 24. Think about that. Yeah, sorry about the delay, guys. I don't know how Don does it in terms of he only has like a 5 to 6 second delay, right? So I'm not too sure how he does that, but I'm definitely going to do some research over the weekend to see how that works and how I can get the delay slightly lower, so whenever there's like a chat I can read it and then you guys can I can answer it in more real time. But yeah, any more questions from anyone? could be just if you have a question, you can just unmute in the Signal voice channel as well. And if you guys on the YouTube have access to paid signals, join the Signal voice chat as well. You know, you can ask questions live there, so I can give you like an actual answer. So yeah. And also, if anybody knows how to get rid of the delay, please let me know. What tool do I use for the white boxes that I use to mark up liquidity?
I'll probably also say...
Yeah, Zay, go for it.
Oh, yeah, I was going to say, like, I'll probably also say something I did notice. I don't know if it was today or the day before yesterday. Just marking up, right? Like, I think you were just saying that when you're marking up, like, when you're marking up, sometimes you're, like, in the middle of the liquidity grab, right? It's grabbing liquidity as you're like doing your like markups, and then you're still expecting for more liquidity. I don't know how to explain it. Maybe that makes sense. Like, I think I'm like looking for. Hold on, let me see. Let me actually look. In the on the. Let me see. Let me see.
Yeah, Zay's just got a question, guys.
Right here.
But Jacob.
Okay, so like on the around the. I'm gonna look at the 1 hour time frame. Just like for just a quick example, obviously I haven't like really looked at it too much just yet. But just like on the 1 hour time frame around, I would say Wednesday
1 hour time frame.
3? You just say 3 p.m.
3 p.m. That's your time,
3 p.m.
though, right? So
I don't know.
3 p.m. is your time, right? So where is that in terms of price point on the chart?
Around the trying to make sure this example like makes sense.
Yeah, of course. Yeah. I can give me a second.
Here, okay, I would just explain it like this, right? So like, the celery play, right, where you're like breaking the lows, like you're looking for buys, right, on the top of the or the flip of the bearish candle, right?
Yeah.
I think sometimes like when I'm marking up my zones in the morning, right, it's like you're in the middle of a celery play. Like it's like you're obviously you're not gonna just wake up and enter a trade. I don't really do that, but like not being afraid, right? When you went on the monthly, I think you went on the monthly time frame or the daily time frame, and it closed below your level of support, right? And I think that's a concept I'm trying to still kind of get better at, is like being able to identify, right, where price is already closing below your support and you're already looking at that next level of resistance / support, right, below or above. Right. I think it was on the monthly time frame, I think you showed, or the weekly, right, where price around the 1918 areas, right, it closed a little bit below your level of support, 1915, I think.
The weekly, right? So it closed below here, right? 1928, or it closed below 1943 sorts of areas. Yeah, if I stream here, it might be easier.
Yeah, because I'm like trying to catch up.
So look at the stream on the chat as well, right? So you're looking at the monthly, weekly time frame. So you're looking for this celery to come down.
Wait, one second. I think it's still low for me. All right, there we go. Okay, so, right, I think you have marked up around this like 1915, right? So like on the tip, okay, right here, yep, right there. Come down a little bit. I probably draw my zone, probably down, around 19, right above, right there. Yeah, so like, right, so it would be like if I was to wake up, right, and price was kind of like struggling to break below there, but then it does, like that is more also like your resistance also being considered your support. I don't know if that makes sense, right? Like you go,
Yeah, so I mean, essentially, right, you can draw your lines quite tight, right? So you could say prices are within this range, right? You have some rejections here, you have some rejections here, some support here, right? And then you've kind of closed.
Right.
You could have said you could have said you faked out, right? You came back, you formed a resistance here, but now you're forming you formed support here, now you're forming resistance here. What does that mean? You're just in a range between 1917 to 30, right? But this is a small range, so this I would say is probably like you could see this as like a 4 hour or like a daily range, right? If we draw this, if we go down to the daily, right? This is the exact range that we're looking at, right? So slightly lower, potentially from you could draw it down to around here to around here. That's your range, right? If you go down to the 4, you could even zoom in this, like you can make this range into like between and then 29 and where it closed previously, right? So if we go back to the weekly now, it's a similar range, right? This is the range you're in, but this is a 4-hour range. So you have to understand that if you're looking at a weekly chart and you're looking at the weekly movements, it's not going to respect 4-hour ranges, right? Because each weekly candle is 1 week, right? So if you're trading this range, obviously we're trading at a lower time frame.
Right.
We have to go down to kind of look, but the weekly and daily are mainly just direction.
Overall motion.
Yeah.
And I think it was really just like waking up, right? And you're starting to do your top down, and then I kind of start drawing my lines on the daily, and then kind of tweak them a little bit on the 4-hour. And then start looking for positions from the 1 hour. You know how you just kind of play the time zone, just like, as you're kind of start reaching those zones in those areas. I think it's just waking up, right, and just being outside of like that level of support, and you're starting to look at that next range below or above. I think that's just more of just getting better at identifying that range that it needs to fill.
Yeah. One thing I want to kind of start breaking down as well is like, so let's say general price action in a bullish trend, right? So bullish trend, let's go through bullish trend and continuation of bullish trend. So let's say price does this, right? Creating these higher highs, higher lows, and whatever, right? And it starts to range here, right? So what is price going to do at this point if it wants to continue up? Right,
but it has to come back down, right?
It's not grabbed any liquidity, right? So you have a couple options. Either you could start picking up, you're breaking out a range to indicate, we want to go in this direction, following this trend, come down to grab liquidity to go up, or right, and this would be the fake out, right? A fake out to come down, and then here you'd have your actual fake out to go back up, right? So this is grabbing liquidity to grab liquidity to go up, right? So this is scenario 1. Scenario 2, it could just not do any of that, and it could just do this, right? So this, right, it is still a liquidity grab, and we would be looking for something like that as well, but just kind of understanding that it doesn't have to come up and go down. If it does come up and then come down, that's just like a nicety. That's just price being nice to us, right? Now we're understanding, oh, cool, it's going up, so let's look for a buy at the lower levels. But price could just, not do any of that. But for a continuation, it needs to grab liquidity, because this push here grabbed liquidity here to go up, right? Grabbed liquidity here to go up. It grabbed liquidity here, didn't have enough to go up. So that means this level is not enough for liquidity. That's it.
Right.
So let's look at reversal. So if price is coming up, right, cool, you're doing this, you're ranging. So I'm just gonna draw a couple candles so I can move them later. But let's say price is reversing. When do you ever see price reverse like this? Right? When do you ever see price just do that? Right? Like it's basically never. Like I can, if you look at the charts, right? Let's go to 4 hours, fine. You see all of this. This is a range, right? You didn't really do anything. So I would say if you're looking at this range between here and here, right? This you spend a lot of time in this range. To do anything, you have to grab liquidity, right? So these are your liquidity grabs. This, right? These are liquidity grabs, like these wicks, right? For you to push up and fill the ranges, right? You came up, you grabbed liquidity here, then you filled the range, right? You filled the range, came back up, grabbed liquidity out of these areas. Like, you could say the range is actually around here, and these were just fake outs. These are all fake outs to go back up. So that's just in general what price does in terms of like consolidation and whatnot. So you never see just this. You always see either, if it wants to go down and it's showing it wants to go down, you either see it do this, right? So it comes down showing that, okay, you're breaking the structure, and then you're grabbing liquidity to come down. You could also see this, right? So similar to this, but just bearish, right? And a reversal pattern, right? So if it does this, obviously we would be potentially getting buys around here to mirror this, right? So if you got into a buy around these areas, what are you looking for? You're looking for this. Oh, sorry. You're looking for price to come up, grab some level of liquidity, because it's likely going to do this, right? If it's going to continue pushing bullish, right? Cool, you know, like it's going to go up, but it needs liquidity, right? This liquidity come down, you know, you're probably going to see some sort of rejection here before going up, before coming down, right? Because if you're truly going down, then this is just liquidity grab to show you this is not direction, this is liquidity grab, right? And then this is your direction. So you need to make a lower low, make that lower high to confirm that you need to start breaking.
Right. That makes sense. Yeah. And you're able to capitalize on both positions too, like whether you're grabbing liquidity to come up or you're grabbing liquidity to come down. It's just about how you see the cycle, right? Like you were saying, you know.
I mean, like, I was thinking about this yesterday as well. Like, so obviously during a push, we can, like, our trading at the moment mainly capitalizes on after it grabs liquidity, right? Or before, and then looking to grab liquidity. So, for example, price pushes up, ranges, and starts pushing up, right? When price does this, cool, we could have potentially gotten some sells here, gotten some buys here, and then gotten some sells here again, right? You know, you're just grabbing market structure lows and highs. In these sorts of areas, you probably wouldn't grab anything unless, you know, it did something like this and be like, oh wow, okay, cool, liquidity potentially go up, potentially get a buy here. But if it's respecting the range and it's not like wicking below or anything, then you wouldn't really get anything. Then again, we would be able to look for some, you know, sells around here, buys around here to grab liquidity to go up. But obviously this range here, it could range for days, right? It could range for hours and days. So maybe our next kind of evolution, or something I might start working on, is thinking about how we can capture some level of trading in the range. Like if you look at this, right? This is a 4-hour chart. You came in, you started ranging here. Like this was the entire range for how long? Let's say it started from this bearish candle, right? Like it ranged for a day and 16 hours. But this range is huge, right? You're ranging from here. That's 100 pip range. And if you just if it tapped the bottom of the range to go up, and you took that, this would have played out in 4 hours, right? So it's you know, we don't, like, currently I don't really know how to trade a range, because the range trading is more complex, because you don't have direction, you don't know if it's going to fill the range or anything. So we're going to need more kind of like detail behind that. But I think it's something that's quite interesting, so we could be looking at that. But obviously the liquidity stuff we've kind of figured out, or we are continuing to figure out, right? So
it's just taking that next step, right? Next year, you know, new things, just tapping in those uncomfortable spots.
Yeah. That's why we're called EvolutionDVS. Well, that's why I created this, like, because we're not going to stay in one place. Like,
I love that. I love it.
It's like, if we don't evolve, the market will beat us eventually, right? So
exactly.
So it's
that's why I think that's why I like trying to, like, I've like at one point, right? Because I started 3 years ago, right? And I struggled because I never really sat down. You know, it was easy to pick up things, but I struggled. But it's like I wasn't, like, I was so fixated on one with signals, right? Up front, like 3 years ago with signals, right? It was so quick, right? And then number two was what would I say? The indicators, right? Just kind of like you kind of cheap, but I wasn't understanding market structure. 2 years ago, Don didn't even understand liquidity. It's just like you said, evolution, because the markets will beat those, indicators, and and market structure changes over time too.
Yeah, I just got a question from Michael actually. So, so I'm showing you the lines and stuff. But for example, like today, this morning, when I got into a buy, then a sell, you kind of made a quick decision to exit, then open the sell, right? Yes, and for me, that's because I saw 10 pips. So my plan there was the range, because I was taking a buy, right? Let's go down to the 5. Let's show you what I mean. So I was in a buy here. Alright, I got into a buy here. Had stops, way below, obviously at least 100 pips, and then I took 10 pips around here. So I think it was like this. So this was my trade. Why was this my trade? Like, I didn't get the signal until like 10 minutes later, right? So I exited the trade here because obviously I understand that we've just pushed very aggressively down. If you look at the 15, if you look at the 30, right? It's just so bearish. And with this trade here, you close bullish here, but you close bullish respecting, these sorts of areas. So if you get that top wick and you start driving down, it's very likely that, it could just not do any of this. Like, this is like price being nice to us, I would say. Price doesn't have to do this. Like, it only did this because at this point, when Don got into the sell, we realized, oh, okay, we exited at 10 pips and we moved stops to break even because we realized that, okay, price is looking like it's going to reverse. I think if we looked on the 1 minute, because I scalp on the 1 minute as well, like I don't just do whatever, right? Like, so look here, you just did a range, right? We got into a buy because you're making this lower, you made a lower high, a lower low, but then you starting to break these lower lows as well, so high lows, and then you're starting to create that upward structure. So I was looking for some level of continuation to go up, right? But once you started breaking here, and then you're tapping these areas, but this candle here I think closed respecting here, right? So I was like, okay, interesting. Like, there is a high chance that either you'll come back down to here, which in that case I'm down 8 pips again, or down like 10 pips again, right? So why not just rather close at 10 pips and then look at when price is very likely to retrace again? Because if it does like want to drive up and grab that liquidity, we're always looking for it to break the lows and then come back down. So where is it on the 5? Yeah, so with this, we kind of also expected it to do this, right? So you're coming down, you're like ranging. You're indicating that you want to drive up, right? Once you indicate that you want to drive up, we're looking for a break of the lows to come back up. It's the same structure as we continue to look when I drew out just now as well, right? So come up, start ranging. If it wants to drive in a different direction, it needs to break the highs, break the lows, and then do something, right? So in this case, it would probably do this. If this came down first, sorry, how do I draw this? If I do this, right? So in this case, if price came and broke this low and then started breaking these highs, then it would be clean to get the buyers around these areas, depending on the fact that we're respecting here. So if I flip this for you, it would look like this. So come down, ranging, right? And then you break the lows, start going up. So sorry, this should be all same level. But if I now copy this and I go to the 1 minute, right? Let's have a look at what happened. Well, what we wanted to happen. So this is what price typically does if it wants to drive in that direction. So we're ranging here. We're ranging in this massive area here, right? So what we were looking for is a break of the lows to come down, tap these areas before coming up. But we didn't get that, so I didn't get another buy to go up. But I closed at 10 pips here, knowing that, at any given point, bearish structure is very, very strong. We could just, consolidate for a bit here, break over the highs a little bit here, and then start driving down. So that's why I closed at 10. I closed 3 positions at 10 today, or yesterday, so made 30 pips, but yeah, no runners. And I think today it's going to be very clean for potential runners. Yeah, I think Don's going to say today's a very aggro day. Yeah, do we have any more questions? I think Bougie, you on mute.
I was gonna ask you 2 questions, but it's Wix's stream is getting ready to start. So I'll probably just DM you about it, just like until next time.
For sure, man.
But it was just I guess the first one was kind of like what we talked about, where it was like, I guess, because when I started watching the streams last year, Don was trading on like the 1 hour mainly, so it was like people were like, oh, like positions take forever, and then it was like right into the 5 minute, like a couple months later, and then I was like, okay, like I somewhat got the hour down, and then like started the new year was like the 5 minute, and it was like getting comfortable with the 5 minute, and then like right into the Wix. So then it was like shit. Like I was so like even I don't know, like I think I told you like the last few days I was thinking in my head, I'm like, there's just so many concepts where it's like I never felt like I got one down to the point to where like I got all of it down, or I thought I did, but then it was just like today, it's kind of like when the professor like throws a curveball at you, like on a quiz or something. Yeah. Where we've been trading wick entries, and then it was like, oh hey, guess what? We just traded a breakout. It was like, wait, what? Yeah. So it was one of those things, and then I guess my second one was like struggling with knowing when we have enough liquidity. I guess similar to like
to the buys that we got, right?
We both had. Exactly. That we had yesterday, and then obviously I told you like I set my TP to close out right there, and it was like 10 pips away, and then I ended up hitting full stop, but. Yeah, that's something I kind of struggled with, but I'll kind of save that for next time. And I know it's like midnight where you are, so I want to let you like take if you need to.
I'll be back on Monday, anyways. I think I might stream earlier so that like we have more time before Wix's stream. So I might start streaming like 1 hour before. I think it's 8 p.m. for you now, right?
No, it's 5 o'clock for me on the West Coast.
Oh, it's 5. Okay, so I might start streaming at 3 for you then. But yeah, like so 11 p.m. London time, so that gives us like an hour and a half potentially to go through questions and stuff, and 2 hours before Wix's stream. So yeah, I think that would be good. But yeah, thanks for tuning in, everyone.
Elvis, what was that? What do you use for that tool? Is it a square?
It's just a square, bro. It's just I go here, geometric shapes, and it's just a rectangle.
Okay. Do you have specific settings for it? Because my rectangle isn't there.
Yeah, I mean, if I double click it, I've set the border to be white. I can add text and stuff as well, but I just have this. Like, I used.
Oh, that's why you did. Okay.
Yeah, and then you can save that as like a template. So I have like a bunch of different templates. Like I have ranges as well. I have like minor levels. Wait, I have one which is like extended. Yeah, stuff like this. I have these as well. So, but it just depends how you use them. I don't use these anymore.
Okay.
I just use this to mirror stuff. So yeah, I feel like white is
because
in terms of
for that Don uses Zoom Don uses things on Zoom, right?
Yeah, exactly. So.
And also, I want to ask you today. Look at price right now, right?
Yeah.
Say we go to the 4 hour, and I seen Don, like, he explained this on his zucchini explanation video. So the 4 hour, we have range, they say those 2 wicks on the 4 hour are range 1 and range 2, right?
I would say this is potentially a range 1, right? So if you drop down to like the 15 or something, you'll see this is a range, right?
Right. So say today or yesterday we broke out, came into range 2, faked back out into range 1, and then right now, wouldn't that be considered? Isn't that what Don? I don't know, because couldn't you take it as the zucchini,
so
right?
you're looking at how we would have taken a zucchini here, right? Is that what you're asking?
What'd you say?
So are you asking how we could have taken a zucchini in this position here, like at the bottom?
Yeah, or like even now, because if you look, like couldn't you just fill the rest of this range to at least like 1923, 853? Since we're like, look at how these candles are closing.
Yeah, I would say you definitely can, but it's currently pre-Asian. There's no volume. I wouldn't say, and you know, like, yeah, you definitely can, but I don't like this as well. Like this very small movement here, I don't like this because it's just indicating that there doesn't have any like volume to drive anywhere, and also you were still within the range. So what you could see is a very bearish candle movement like this. You know, like you could be looking at that, and then that would follow bearish structure as well. Obviously, yeah, you can come up, like I'm expecting it to tap 1928, right? So how it gets there, I'm not too sure, but like it'll range, it'll break highs and lows, and it'll get there eventually. But to answer your question regarding this, so let's say price, what price did was it came down, tapped these areas, right? Started ranging here. Cool. So this is your range one. You've established a range one. You come up, right? So now you're in a potential range two. You've come back to fill range one, right? This is just what happened here. I'm just mirroring this, right? But price just drives straight, right? Obviously this is 15. You might have seen it on the 5 or whatever. But if price now breaks above here, respects, the zucchini would be potentially, if you were to take the zucchini and then flip as a break of previous high or low, then you would have a buy here, if that makes sense. Because this is one candle bullish from here to here. There's another candle bearish respecting. And if you break these highs, or break the previous candle, the bearish candle high, then you can take the zucchini up. Right?
Yeah, that makes sense. I'm just I'm trying to see. So it wouldn't even have been possible on that move right there, right?
So no, there was no, like, unless you took it like, I don't know what it looked like on the 5. Like, yeah, like it just broke through, right? If it respected once and then started going, cool, we might have had zucchinis. But yeah, like it's difficult because we were looking, well, I was looking at 1915 areas to get that rejection. So even if a zucchini did happen, I'd be still slightly worried because price was so bearish. But yeah, that's just what the zucchini would have looked like, essentially.
Yeah. All right, that's all I had asked.
Yeah, no worries. All right, I think cool. I think I'm gonna end it here. I gotta bounce. Gotta wake up early tomorrow. So thank you everyone for joining. I'm gonna end the stream now, and I'll send the link out to the Signal groups, so you guys can have that to look at later on if you want. But yeah, cheers for tuning in, everyone. Have a good night. Good luck in Asian.
You too, Elvis. Be safe.
Peace out.
Everybody be safe. Peace.